Good morning, good afternoon, good evening, whichever one it is for you. I want to take a second today and go over the Bitcoin chart, starting on the 3 day. Try to get a look at the bigger picture first, and then we'll dial it into lower time frames. Uh, but the first thing I want to talk about is the pattern we've been watching in the Discord. After our initial trade setup down here, this pattern starts developing, and this is a common pattern at the end of bear markets, at the end of bull markets as well, and I'll tell you why I said that in a second here. Um, but it's very common as a macro reversal pattern. You want to call it, right angled and descending broadening formation. If you want to call it Wyckoff accumulation, it all of these patterns kind of they paint the same picture, and that is a reaccumulation after a long bear market. And in this case of this pattern, you've got downsloping consolidation. If you were talking Wyckoff, this would have been your preliminary selling, your selling climax, your automatic reaction, your secondary tests, and then your spring. You got your spring, your test. This is how we took our trade setup in the Discord off of this test, because what this implies is this is a strong move down. Anyone who would have taken longs or had stops set up below these lows over here, they would have been taken out. This is usually accompanied by a news event. In this case, it was FTX, where we take out the lows, the bearish breakdown gets rejected, and then you spring back up, retest, and move back up into the range. And in the case of this pattern, this partial decline, this higher low, gave us the information we needed to know that, more than likely this pattern was going to break to the upside. And that's what it did. After, you got our initial rejection here, the second rejection here, then we finally, after coming back down, I think we tested the 200 moving average when we came down for this, bounced off of that, and now we're up at the 382 holding high and tight. And ironically enough, if you flip the chart over, this is kind of the same thing that we did to top. When we initially peaked out in 2021, right? This would have been your preliminary selling, your selling climax. This would have been your automatic reaction, and then the spring would have been the 69K top with your secondary test right here. And then same thing, spring, you pop up a little bit, you retest, right? You got this little zone right there. We broke below it, and you could probably go like that if you wanted to that would have been, the bottom of the range if we were looking at this as an accumulation range, or as, the range we're forming right now. And this would have been the spring where we broke under the old support level just to get rejected, come back up, back test the same level that we were at over here. And then from there, you would have gotten your rise, your retrace, which would have been in the same context, your partial decline, and then you come up to the top of the range before breaking out. So if we were to look at where we're at right now, right, we got our rise, our retrace, partial decline, and then we moved up to test the top of the range, which is just underneath this support level here at about 28.8. On the 3 day chart here, you could see that was a wick low back in January of 21. And then again, you got tests in this area multiple times. And then ultimately on the breakdown from all-time highs, that's where we found support once again. So this is going to be, quite the resistance here, but we're still holding high and tight. If we manage to get a full-on breakout above about, I would say 28.6, you know, ideally you'd like to see it break above there, confirm that resistance has been flipped into support, um, something like this. If we do end up getting a breakout, it's probably going to come retest these highs and these wicks. There's going to be a lot of liquidity still up in these zones, so we'll probably break above it, come back down, retest, and ultimately I'm still looking for about 38,000. In the context of the broadening formation, the broadening bottom, what you do is you take your price tool from the bottom to the top, and then you add it to the breakout, which the breakout was from about 25,200, and that gives you about 40,000. I like the 38,000 level because it's the 618 retracement. Even if you really want to be bearish and you think this is a bogus rally, manipulation, whatever you want to call it, the 618 would kind of be your bull trap level. If we're talking from the whole bear market, if we retrace 618, typically if you were talking an ABC, we would then get a 1618 extension of that, to go A, B, and then C down further, or potentially, maybe it just ends up being a flat where we come down and retest, even as low as 18,500 eventually, right? And I'm kind of thinking this is going to be, what was it, the 2015 bear market, where we do get a real nice retracement, and then you get the strong pull downward just to come retest the lows one more time before you get into the halvening and the full-on bull run. I'm not saying that's going to happen. I'm not even trying to predict what's going to happen at that point, at this point, because I'm we're taking it level by level. And at this time, especially if we continue to hold high and tight above the 382, or even if we came back down to retest as low as 25.2, I don't see anything wrong with that. It would make perfect sense to come back down, just like I was talking about up here. If we came down and just retested the breakout bar, the top of the range, and then moved up, it's something I'm keeping an eye on right now. On there is variables right now that could imply that we're going to see some near-term downside, and I'll go over that too. But I just wanted to give an update on this specifically, because this is ultimately the macro reversal chart that is most important to me, because you want to see this continue. I've seen some guys on Twitter talking about this being a parabolic log curve, and that would, again, that would still make sense. If we got some near-term volatility, we came back down for a back test, it would still most likely maintain the curve. Or if you wanted to just say, hey, as long as we hold this trend, I would say there's nothing wrong with any type of pullbacks, any type of consolidations. It would make perfect sense, and ultimately, maybe there are people on the sidelines that are waiting to see that, but that's not necessarily an argument for a pullback, because sometimes making those people chase the trade and convincing shorts that we're going to get a strong pullback can end up being what drives the market most. Because if you have a large amount of shorts piling in and you get somebody like Saylor from MicroStrategy. He's been, coming in and buying large amounts of Bitcoin again. Um, so if you get a technical edge that says, hey, maybe we're going to get a pullback, sometimes you just don't get them, especially in a strong trend, because what happens is you get so many people trying to get on the other side of the trade, which ultimately right now would be trading against the trend. You end up getting short squeezes. And that's what happened last year from about 28,000 to all-time highs at 69. That was just multiple short squeezes, one after another. On-chain data and market data, it proves that. It was, FTX had a lot to do with that. But I digress. The main thing is, hey, we might get a pullback, we might not. I'll dial it in a little bit to lower time frames to, tell you why I think we might. But unless we really break down, I think, my line in the sand is probably going to be if we break down into this range again. I wouldn't want to see that, because that's going to change market structure. Granted, a higher low than 20,000, it wouldn't be a big deal if we keep making higher lows. We could just come down to this trend, but I think the trading outside of this range, I think, is important for my bias at least. Anything above that, and again, that's like 25 250, I don't have a problem with it. I would look at that like a buying opportunity to add to a position or to enter a position with the right variables, of course. So what I'm going to do now is I'm going to hide the drawings and unhide my indicators. And if we were just going strictly off what these indicators are telling me, I would look at it like this, right? This is our HMA, these golden dots here. This is basically our mean reversion. If we get a pullback, that's what I would be looking for. Always, major pullbacks would come, especially on lower time frames. This is the 3-day still. On lower time frames, you see this HMA, and this is part of the fib ribbon. That's indicator in the Discord. But this is basically my mean reversion. You're going to see price come to and from it, ebb and flow. And I also like adding, that one is the 4, 2, 3, 6. I like adding the 100 and the 1618. And these are kind of the same thing. It's just a bigger range of, if you're in a bull trend, that's something you would want to buy at. If you were in a bear trend, those are targets, for an area that you might add to your shorts or take a short position. But anyway, again, as long as we're above that, and I think we're at about 25 100, that would be my line in the sand here. Damn it. And then underneath that, you've got, this is the momentum moving average, the MMA. This is basically, it's based off the 55 EMA. This would be your short-term bullish momentum. As long as price action is trading against that or above that, short-term bullish momentum remains intact, and you're sitting at about 24.3. So again, 24.3 would probably be my line in the sand. You'd want to see that held. But on top of that, now you've got, this is the faster moving average. The HMA would be your slower moving average. Like if you were talking, a golden cross, this would be the same idea. Your slower moving average crossing over your faster one crossing over your slower. So what I'm going to do is actually Olive. Hide those. Hide those. All right, so as far as moving averages are concerned, that would be telling me that this is probably going to be a safe place. Um, if we do end up getting a pullback, this is a zone that I would expect to be retested. Whether it holds here or not, I can't predict that, but I would assume so. His famous last words, never assume what you know or what you think the market's going to do. I think I said that right. All right, so we got our moving averages. The ADX right now is green. That is a positive trend. We are above the Ichi cloud. That was back tested when we got this drawdown here. We were looking for a fifth wave still. When we came back down, we back tested the cloud and got another wave up. Now, we don't know if this wave's done just yet. This could continue. It could be an extended wave, and if we were looking at a target on that, we would go from the bottom and probably, I think if you were looking for an extension of the fifth wave, it's probably going to be up in here. You know, low 30,000s for now. Before getting a pullback, if we don't get one now, that would probably be, you know, an area that I would expect to see this wave complete. That would be on the downside. I would say, and this is why we could see a short-term pullback. Obviously, I'm sure everyone's talking about the bearish divergence in the room, not just here, but we also had divergence along this whole trend, this whole, and mind you, this is kind of the same formation that we're talking about as our bottoming formation, because if you look, invert it, same idea, down sloping consolidation. Usually here is where you're going to get a move up to come retest some of these levels. But in any case, that would be the first target for the downside, you know, probably around 25. Maybe we just come retest these wick lows here at like 26.5, or maybe we don't. Maybe we just sit here in this little range until we make another move, like a bull flag of sorts, right? Something like that. And if we were talking this being a bull flag, an extension from that is going to, you know, probably be right up at our target on the daily, or from the broadening formation. You know, same thing, right around 38,000 bucks. And if you were going to take a local extension of the wave, this is another way of doing what I just did. Yeah, same thing. The 1618 extension of this is about 37,300, and again, that's right about where our target's at on the upside. And furthermore, right, if we're looking at these oscillators, we've got the BBWP. This is an indicator from Caretaker that measures the Bollinger Band width percentile, which is a way of measuring volatility. As this is rising, volatility is rising. When it's bottomed out, this is, you know, extremely low volatility. When it's underneath the moving average, you'd read that as volatility is contracting. But if you notice on this latest drive up, which would be this move right here, you're starting to roll over a little bit. Now that doesn't mean anything. Volatility is a tough measure when exactly it's going to stop having an effect on price movement, but it does show you, hey, we've got bearish divergence, you've got volatility possibly starting to cool off a little bit. You know, maybe that is telling you that, hey, this is where a correction could come in a little bit. And you add that with the ADX in the background here. The ADX shows that this trend from all the way down here is starting to roll over. It started rolling over right around here, and it's been losing strength ever since. And if you look at the DX cloud in the background here, the green and the purple, same thing. The DX cloud starting to deflate a little bit. You know, all of these things, you know, are starting to tell you a story. It doesn't mean we're going to crash. It doesn't mean, you know, we're going to have some major correction, but it does mean that, you know, things could be cooling off here. You could, you know, come as low as over time. Maybe you end up getting something like that. You end up coming down to this level. Never hire me to draw straight lines, by the way. You know, it's right now it's too early. You know, we could end up, you know, RSI could still take off and go higher. Same thing with price. But it's something to keep an eye on. If you look over here, SMI says as long as we're above 26,318, we are in good shape. VWAP is about 28,157. So we're under VWAP right now. The momentum moving average is at 24,313. So that says as long as we're above 24,313, we're in good shape. Super trends are bullish. Bullish on the Ichi cloud, bullish on the RSI at 65.93 and rising. Stochastics also rising. MACD momentum is falling, but it's still bullish right now. And we've got about average volume in this time period, which is ending in 4. And if we zoom into the 4 hour here, now this is real subjective. I've been looking at this as possibly like a wedge of some sorts. And in the case of this, if this was the case, you know, again, this trend line is pretty subjective, but we do have 1, 2, 3, 4, 5, and then an underside respect of this trend, so 6. And in this case, we are broken down from it. You know, you could say, hey, well, maybe this is the trend. Maybe your trend's wrong. I'm not here to say that either one's right. I'm just saying if that was the case, you know, you'd probably be looking at something like that for downside. And that would take you down to back test this little zone here where you got multiple tops. And if you were looking at this, our Elliott wave count, that would be, you've got your A, your B, and then if you were talking that would be about a 2.0 extension almost. If you were talking to 1618, that would be that zone here, which makes sense. You know, these both are zones that technically you'd want to see. Once they're broken, you want to see a back test. You could say this is kind of subjective because you did break above it. You came down and you tested it not once but twice. So that, you know, those would be potential zones if you're playing the shorter time frames that maybe they get retested. I like that that's a 113, you know, because a lot of the time when you get these, here, let me get rid of these. if you were looking for an expanded flat from here, say this was the completion of this wave 5, your expanded flat would go something like that. The expansion is the fact that you're making a new high rather than a lower high as a normal ABC would be. But because it's exactly to the 113, that would make me wonder is if we're just going to get a real quick move lower low to the 113 or even to the 127, which both of those actually line up. This is the 1272 down here, and then your 113 is going to be, you know, basically this range here, this little supply zone. So this makes a lot of sense to me. I would love to see Bitcoin stay high and tight up above, you know, $26,000, or at the low end, you know, 25.1, 25.2 would be my line in the sand, but it'd be much nicer to see it stay up here, come back, retest these as support, and then continue on. But that's just me thinking out loud. That's not trading advice. That's not technical advice. And if we're looking at, you know, the 4-hour does have some really mild bearish divergence here. We are underneath the momentum moving average on the 4-hour. Now, one thing that I would be cautious about is the fact that the ADX is expanding into a bear trend. It's gaining strength a little bit here, and you also have volatility setting up for expansion from the lows. Now, if you take all of those things and you put them together, it could imply that we are going to see this move to the downside, and you're talking about 8% from here down to these lower areas. And it wouldn't be weird. I mean, you're looking at the chart. This is exactly what the chart's telling you could happen at the moment. On the 4-hour, you don't have, you know, all of those variables that we talked about going for you. On the 4-hour, it says the SMI is falling below 28,400. VWAP 28,100. The momentum moving average is 28,100. So it sounds like under 28,100, Bitcoin is in trouble, at least on lower time frames here. Same thing, the ADX is just trendless, but this is something to keep an eye on for sure. RSI is bearish at 47. Stochastics, they look like they're coming up a little bit. MACD momentum is rising, but it's still bearish, and very low on volume in this time period. Volume's at 20, average volume's about 866. So, you know, right now is just kind of let's see how it plays out. As far as I'm concerned, I'm not trying to take any new trades until this is resolved. I want to see, because you know that if Bitcoin's going to come down 8%, that's going to be trouble for just about everything else. So yeah, that's about it for Bitcoin today. I'm going to go over some other assets and get some new videos out later tonight. So if you guys want to see more of me rambling, making magical chart zigzags and all that stuff, subscribe, join the Discord, follow me on Twitter at Trade Nomadic. It's right up at the top of the screen. If you can see me pointing to it, let me see. The bootleg version. Subscribe. There you go. yeah, but that's how you get a hold of me. If you want to, you got, any questions, comments, hit me up in the Discord, in the comments below. If you have any assets that you want to take a look at, something I should cover, something I should do different, maybe you think I suck, let me know. But that's it for me for now. I'll see you guys later.